Hello everyone, it is Dave Redlick, aka Realtor Dave, and what I'm here today to talk about is new mortgage rules. Most people know Canadian government has changed the mortgage lending rules, specifically with Canadian loan insurance, CMHC. I'm not going to talk today about what they did, I'm going to talk about how they affected. It's going to be a Coles Notes version. I'm going to go quick and I'm going to bang through it, so if you have any questions, you always know where to find me, info@calgarycountryreport.com or 403-990-1278. So here we go. How much more am I going to have to pay? By how much more am I have to pay, I mean per month. Obviously these rules are put into play to save you interest in the long term. In the short term, for every $100,000 you borrow, you'll be paying $50 more. So now it doesn't sound like a lot, and it's not a lot, but what it is going to affect greatly is people's ability to qualify for a mortgage and how much they can afford to qualify for. And what we're looking at by our calculations, by our numbers of these current interest rates, people are going to qualify for about 12.5% less on average for a mortgage. So if previously you qualified for a $500,000 mortgage, now you're looking at about $443,000. So that's kind of a shocking number, and a lot of people are going to be a little bit taken aback by that. However, there's still a little bit of time to get in there under 30 years. You have until July 9th to have a purchase contract, a done deal in place. Pre-qualification does not matter, but you don't have to have the funded deal. So you don't actually have to close by July 9th, but you must have the contract in place by July 9th at 6 o'clock Eastern Time. Failure to do so means you're going to 25 years. So now realistically, it takes a few days to at least qualify, and a lot of the banks, a lot of mortgage brokers I know, they're preparing for this, but even still, if you do not have a firm contract in place by, at the latest, July 4th, it's not going to happen. And I'd say for safekeeping, go July 2nd. What does this mean to the average, to the current sellers? If you're thinking of selling, you want to sell, you got to get your home on the market right now. Give your home the best opportunity to sell in the next 10 days. To the average home buyer, if you're looking for something, you need a 30-year AM, and you're worried about what you'll qualify for under 25 years, you gotta get it there and you gotta buy right away. We may see a small spike here. However, you're looking for the long term. You're gonna buy it for long-term holds, at least 5 years, as you always should be. It'll probably be a blip in the scale. Because they've only given us 2 weeks as opposed to the usual 2 months when they dropped it from 40 to 35 and 35 to 30, I don't see a big run-up happening. So if you're looking to buy, get out there, buy with confidence, but know that you may see a little dip in your prices in the next little while. If you, however, can afford, you're not urgently to buy, you're safe renting, or you're currently owning and you're fine where you are, maybe see how you can do here. Let's let this thing play out. Maybe we will see some price drops. And I don't think the long-term health of the Calgary real estate market is going to be affected, but in the next year or so, you may see some price decreases. It all depends on, obviously the economy, with jobs, people moving here, with rents. These things all play a part in Canadian home prices and Calgary prices, but don't underestimate the effect that this loosening of the mortgage strings had on the market in terms of the prices, and now the tightening's going to have as well. We are going to see some effect. But I'm not going to scare anybody. We're not going to see anything crazy. If you own a home and you're not considering selling it right now, don't worry about it. At the end of the day, so long as people can pay for their mortgage every month, home prices will not see a drastic reduction. We haven't seen them run up we haven't seen them run up previously, and now people don't have a lot of equity. They can't afford to cut their price. People still need to sell for a certain price. So the overall message here is that despite these mortgage rules coming in, the long-term health of the Calgary real estate market is fabulous. If you can afford to get out there and get a part of this, I still recommend doing so. Obviously part of a diversified portfolio, but at the end of the day, guys, these rules don't affect things over the long haul. In the short term, they're going to, not the long haul. If you're currently owning a home, you will not have to requalify. If you can see you got a 40-year AM, you will not have to qualify under 25-year AM. You will be grandfathered in, at least as of now. They could change those rules, but I think if you've been paying your mortgage, that's all the banks care about. They will not force you to requalify. Okay guys, that's kind of a very Coles Notes version of a very important issue. If you have any questions, I do really encourage you to call me, 403-990-1278, or find me at info@calgarycountryreport.com. Alright guys, happy hunting out there. Talk to you soon. Bye.